In this video, I'm going to show you how to pay off your mortgage in 5 to 7 years using these proven strategies to achieve your financial goals. Save you hundreds of thousands of dollars on interest. So if you're ready to take control of your financial future, watch on, let's roll. I'm Ella Gurfinkel, Senior Loan Officer with Fairway Independent Mortgage and Team Ella. And today I'm going to share with you a number of powerful strategies how you can pay off your mortgage, become debt-free, and not suffer from a 30-year-long mortgage repayment. The strategies are totally practical. You can apply them today, and you can start using them on day one without too much financial strife. Now, if you stick around to the end of the video, at the end, I will share with you a little bit of a bonus. Let's keep it interesting so that you can be fully armed with multiple ways to actually pay off your mortgage and achieve your financial goals. The first strategy is to increase your monthly payments, meaning whatever you have to spare, even $100 a month will make a hell of a lot of difference in reducing not just the principal, but the interest you pay on your loan, and will shave off years off the end of the loan. So effectively, if you could find $100 to add to every single one of your payments, you are looking at shaving off easy 5 years off of the end of your loan, meaning you just went from 30 years down to 25 years. By applying this one simple strategy and by doing something as simple as sending the extra cash towards your mortgage every month. Step 2, most of us do end up with occasional pay raises at work. And this one actually works even more beautifully for those people who not just get the pay raises, but also get bonuses, because you can take that bonus as a lump sum and actually apply it towards your principal. When you do that, you're taking off a chunk off the top on the principal, but even more importantly, you're basically taking off roughly 3 times as much off of your interest. And that is what is actually squishing down the repayment of your loan down to a shorter term. Because as you know it, the bigger chunk of your payments for the first 10 to 15 years goes towards the interest, not towards the principal. So anytime you're dumping a chunk of cash, no matter how small actually, towards your principal, you're automatically taking that chunk of interest as well out of circulation, so to speak. So roughly 1 to 3 relationship between the principal reduction that you make and the interest that gets shaved off. So that's actually something fairly simple that a lot of people overlook. Well, take that increase in your monthly net income and apply that towards your principal, and you're shortening your loan term as a result. Here's the point number 3. You can maintain the same level of payments if and when the interest rates drop and you actually refinanced your loan into a lower interest rate as a result. You can still maintain the same higher level of payment because now a chunk of money goes towards your principal every month once again. The 1 to 3 relationship between principal and interest reductions will not apply at lower interest rates, but there is a relationship nonetheless. It goes down as the interest rates go down, so it may go down to 1 to 2, yet the coefficient or the multiplier doesn't really matter. What matters is you're paying down the principal, you're reducing the compounded interest, and you're continuing to reduce the repayment term from 30 years down to whatever it is that your goal you're striving towards. Do I recommend going into a 15-year loan when the interest rates drop? That is a personal question to most people, to be honest, because myself, not necessarily a fan. But if that is something that will produce the payment that you can manage on the monthly basis and still pay off your loan faster, then the answer is yes and hell yes. Go to a 15-year. Now, if 15 years is going to put you into a little bit of a tight spot without the bonuses, raises, whatever, completely rebudgeting your family situation, then my suggestion is don't worry about it. Go with another 30-year loan and voluntarily pay extra per month based on the lower payment and with money to spare rather than going higher payment, less money to spare to work with. So here we've covered so far 3 different ways that you can actually pay your mortgage off a hell of a lot faster. If you want more truthful and blunt information about improving your finances, subscribe to my channel and we can have a deeper conversation and even connect further. Here's the next strategy for you. Use revolving or offset accounts. While the concept is not overly complicated, it essentially entails linking your revolving, offset, and mortgage accounts all into one system where all of your deposits go through one account, all of your payments go through the other account, and as a result, you're reducing your interest paid on multiple levels and creating your own compound effect on paying less interest and applying the money saved to your mortgage. Now, this is something that requires a whole other deeper conversation, but it is a great strategy nonetheless that you can definitely put in play. This one is the mother of them all, and that's a mortgage buster strategy, meaning you're combining all of the above, not just one. You don't pick and choose which ones. You literally are combining all of the available strategies into one big mother, where you're putting everything you got towards paying down your mortgage faster. And it's literally everything I talk about on my videos about paying down your mortgage. So again, you're not picking 1, 2, 3, or 7. You're applying literally all of the strategies at the same time as you go to get the maximum impact to become debt-free. You've listened to me talk long enough. Now, here comes the bonus one, and you will never guess what it is. Do not pay for mortgage accelerator programs. Don't pay for the courses that tout total financial freedom, because those who can do usually teach. Their only goal is to milk you for what you got. Their goal is to take your money and make them rich and not to help you financially. Use the tools available to you at your disposal that are abso-freaking-lutely free, and do not buy for get rid of your debt schemes that charge you a monthly fee or charge you for the course to take, even if it's a $99 course. 99 bucks may not sound like a lot, but that's 99 bucks you could put towards your mortgage repayment, towards your mortgage principal, and get down in time to shorten the repayment term. So do not waste your money on schemes that basically tell you the same things that I'm telling you here right now for free. Thank you for watching. I will see you on the next one. Comment below. I would love to hear your thoughts. I would love to hear about your success. And frankly, if you're a naysayer, what the hell? Let's have a conversation. And yes, I get snarky in those sometimes, but let's have those nonetheless. And I'll see you again. Talk to you soon.